The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Snowing here in the Pueblo, folks. 38 degrees. We got snow on all four mountain ranges around us. The Rincons, the Mexican Rockies, the Arizona mountains, and the mountains right behind me, the Santa Catalinas. They snow everywhere, so it looks like Switzerland here. Fortunately, it's a lot less expensive here than in Switzerland, but it is cold. Okay, we're going to take a look at these markets. We start off looking at the DAX on a 4-hour. You can see it's been in a short-term downtrend. The FTSE, we've posted the weekly showing the big Gartley patterns completed at the ABCD. Following that up with the FTSE at the 60-minute chart showing it's in a shorter-term downtrend. Folks, I'm going to continue on here just a little bit about statistics. Tommy was talking about the decision made by the Green Bay coach not to go for the touchdown with 2 minutes to go on the 4-yard line with 4th and 4, something like that, whatever it was. You know, it's all about statistics, and baseball is all about statistics. And we lost one of the greatest players of all time this weekend, folks. Hank Aaron died at the age of 87. Hard to believe he's only 7 years older than me. I always thought he was older than that, but he was certainly a great player. But I have a great story about statistics and Henry Aaron. This was in 1975, right before Tommy John had his surgery. He was pitching for the Dodgers. They were playing against Atlanta, and this was the twilight of his career for Henry Aaron. He retired, I believe, in I think it was 77, something like that. I don't remember which year it was, but he was playing for Atlanta. They were playing the Dodgers. It was in the middle of the season. It was like June or July, and Tom was pitching. He had runners on first and second, and it was I think it was about the 6th or 7th inning, and Tom was pitching, and up comes Henry Aaron with nobody out, first and second, nobody out. The Dodgers are ahead 3-1, and the manager for the Dodgers pulled Tommy John and brought in a reliever because Tommy pitched left-handed, Aaron batted right-handed. That statistic is supposed to be favored, but when you're playing Henry Aaron, there's no statistic. He was just that good. So anyway, Tom gets pulled out, and then the kids are with me, and whenever somebody was really great, like, somebody really great, like Henry Aaron, Willie Mays, anybody, the Dodger Stadium would turn on the PA system so they could listen to Vin Scully give a play-by-play broadcast of what was going on. And so we had Henry Aaron up. So he's one of the greatest, 700 home runs. I mean, he was really something. So anyway, they're talking about it, and Henry gets up, and Scully is telling about statistics and stuff like that. The reliever comes in, and he gets ready to pitch to Aaron. It's a right-handed pitcher, right-handed batter, and they pitch the ball, and Henry Aaron lays down a sacrifice bunt, and Vin Scully said, "Oh my God, Henry Aaron is bunting." And my kids were with us, and they said, "Dad, what's going on?" And everybody was booing and booing and booing. And I said, "Well, he's really a great hitter, and he's never bunted before." And Scully says, "Ladies and gentlemen, in 3 decades of playing baseball, Henry Aaron has only bunted twice." And he said, "Today's the second time." And they're booing like crazy. And then Henry Aaron comes out of the Braves dugout because he got called out for, his sacrifice bunt, and he raised his hat and Dodger Stadium went absolutely nuts, yelling and screaming and clapping and standing ovation and everything for one of the greatest players who, did what his manager told him to do, and put the runners on second and third. And fortunately, the pitcher for the for the Dodgers, got the side out, so it didn't mean anything. But he was basically, all about statistics. So anyway, that's what happened. Whenever Tommy pitched, we would go and watch him play as a family, but we never got to see him because after the game, he had to have his arm iced down, and it would be 2 hours. We didn't want to wait that long. So the next morning, I called up Tom. I said, "Hey, what's going on, TJ?" And he said, I asked him about what was happening. He said, I really wanted to pitch against him. He said, because I had good stats against him. I've only faced him probably 20 times. But he said, I've done pretty well against him. But he said, frankly, when he bunted, he said, I was shocked. He said, I never would have expected that. And I said, nobody else did either. Okay, let's talk a little bit about statistics here. Let's take a look here at the Dow Jones Industrial Average. I don't know if you folks know this or not, but the Dow is a price-weighted thing. It's not cap-weighted. And here, if you look at the E-mini, it's in dark red. In orange is the Dow Jones E-mini. That is a price-weighted average, whereas the E-mini is a cap-weighted average. But you see the correlation is still 99%. This is a very, very high correlation. I mean, they move difference in price, but the correlation of going up and down is quite important. But today, look, you've got the NASDAQ up 100, the Dow down 150. So those are situations that are all related to numbers and statistics and, stuff like that. So I think it's important to remember that the Dow Jones is a price-weighted average. So it's heavily skewed. The Dow Jones, the Dow Jones family runs the Dow Jones Industrials. And they were one of the reasons they wanted Leo Melamed wanted the Dow Jones to be the leader at the CME. The Dow Jones family wouldn't have anything to do with it. The reason why I know any of those things is because my friend Byron Tucker was involved in the negotiations. He was Leo's right-hand man. And the Dow Jones family says, we don't want anything to do with gambling with this. They, 5-6 years later, it was the Dow Jones finally went to the Chicago Board of Trade where they traded it there for a while, and they still do. Well, it's traded at the Merc now, but anyway, that's neither here nor there. I wanted to give you the statistics behind that, just to let you know where we're standing at that level. Someone's asking me, what's my favorite Tommy John story? Oh my God. There's so many. Well, I think the best was 20-some years ago. I don't know if you know this, but baseball players, when they retire, they make their money by playing in celebrity tournaments. They get like $5 to $10 grand, plus the weekend playing golf and prizes and stuff like that. And Tommy was playing in Scottsdale, and I had sent Jill and her husband over to Scottsdale for a weekend. And so we went up to I went up to see Jill and was going to see Tommy. He was at the staying at the Phoenician, and so Jill came with me because she went to school with Don Sutton's kids, and also Don Sutton's was taught how to type when he became a broadcaster for CBS. Was CBS or ABC? Whichever it was. My ex-wife taught Don Sutton how to type. And so she went to school with the kids, and so we were basically family friends because we saw them all the time. So we were standing there. There was Tommy John and myself and Don Sutton, and in walked Reggie Jackson, who was one of Tommy's really, really good friends. And I had met Reggie once before because he plays poker there. And my daughter Jill was there, and Reggie Jackson walked up and and it was really funny because we were hugging and, all that stuff. And my daughter said to Reggie Jackson, she said, "Oh, I hated you so much." And Reggie started laughing because he was always a nemesis to the Dodgers. Anyway, we'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of tfnn.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted the chart of the E-mini S&P. You'll see here that it's got that big ABCD pattern up here. What's interesting is we've been up here at this big expansion number for, it's been a couple of weeks now that we've been up at that 38 and a quarter. We hit 38.57 last night. And of course, the NASDAQ is the one that has been leading. It's very, very close to a 1.618 expansion. I focused on that in the newsletter this weekend. If you want to check that out at the 24/7, you'll be able to see the Trade What You See newsletter was talking about that considerably. Whether this is going to be a short-term top, a top, or any top, or no top at all is not important. It's the amount of money that you have to risk to see if you're going to see if that's going to be a top. I believe that number comes in at 13,590 or something like that. We were within about 90 pips of 90 handles earlier today. I don't know where it's trading right now, but that's something to take a look at. One of the things that's interesting in the market, folks, this is a chart from Martin Pring. He's been around for a very long time, has some really good statistics, and he shows this pattern here, which is the relationship between the stocks and bonds. And you'll notice these big green arrows here where you see the relationship, how it turns at certain times where bonds, move higher to stocks. And we've got one of those situations now where bonds have started to move up after being down for quite a bit. I don't know if that's related to what's going on with the Federal Reserve. They're going to have to be, borrowing a whole lot of money here. And that means that we're going to be looking at, higher interest rates, not lower interest rates. So that's it. Now, maybe this will all change. Maybe they'll trash the dollar and maybe everything will go back the other way, but I'm not so sure. I really don't know what that means. By the way, we are going to have Rich Anderson as our guest at the break, and we're going to be talking about the grain markets. And one of the things that we did this weekend when we were doing the letter, we did a nice video on this, is to pay very close attention to what was. Hold on here 1 second here. And you'll see here there's a 382 retracement here that we hit here at 492 here in the March corn here today. That's an ABCD. That's the first one we've had since December. So it's been 2 months since we have anything like that. And Jimmy's saying he ran into Red Jackson in the crowded Caesars in the mid-90s. And Reggie was much shorter than I expected. Yeah, he's only – no. He was 6 foot. He was 6 foot tall. Reggie was 6 foot tall. He just looked taller than life. And he is such a nice guy too. He plays poker at the Talking Stick there in Scottsdale that I used to play at. I haven't played in it but twice in 1 year. But he plays in the really heavy or large limit games, 40, 80, which is $40 and $80. You have to have $3,000 to buy into that. But he's really friendly. He speaks to everyone. He gives autographs whenever anybody asks him for it. But most people just leave him alone. And I think he probably likes that too. Let's take another look at one of the statistics here. We showed that one from Martin Pring. I wanted to give you this one right here. It's what's called the Buffett indicator, and it's also related to corporate equities. And the when you're 6'5", Jimmy, everybody looks small. 6'5", get out of here. Speaking to someone who's only 5 foot when I stand on my toes. Here's the Buffett indicator. It shows corporate equities to GDP. Look where we were in the dot-com bubble, folks. We were at 159%. Now we're at 176%. But of course, it's different this time, but this is just one of the things that people are looking at and relationship to stocks and bonds. We have seen an incredible move here since March 23rd, folks. Whether it's fueled by anything you want to look at it, you have to pay attention to it because that's really serious money that has gone into this market, and it could continue going up for a whole lot longer. There'll be bumps along the road, possibly, but it's got a chance to go a whole lot farther because when you see parabolic moves like that, they don't stop overnight. And that's the key to remembering this, is that they really don't stop overnight. I'll talk more about the corn and the beans when Rich comes on, but I think it's important that we pay close attention to what's going on in those grain markets because these things will affect inflation down the road. And I'll tell you, we got beans in the teens right now. Even with a $1.50 correction, we're still sitting at $13. So let's take a quick look here at the S&P cash. And I want to just bring the relationship between the S&P cash with the Dow one more time. You can see here that we have a beautiful butterfly pattern that is formed up here at that 385 level. That's equivalent to 3850, of course, in the S&P, which we've hit twice over the last couple of days. Whether that's going to be a short-term top or not, I don't know. But all I know is you don't have to risk very much at that point, and that's pretty much what you want to be watching for as a risk control mechanism, because that's what these things are really all about. The Floor Traders Handbook is really focused on, risk control. I think we ran 10,000 samples, as I recall. John Jameson did, and it's just really amazing, the statistics behind it, because that's what the markets do, folks. They go up, down, and sideways. They do it in ABCD fashion. And as a trader, what you want to try to do is to find out where you are within that ABCD pattern, and that gives you a slight edge, and that's all you really need, is that slight little bit edge. But the problem is the emotionalism that comes on, once a trade is placed, because that's, you want to prepare all your trades and get ready for them. But once that trade is on, that's when the trading really begins, because you have to make a decision. Okay, you're in. What do? You put your stop in. You know what your risk is. Where do you take your profits? And the problem that you have here with what we're looking at with all this electronic stuff is you get to see exactly where you stand within a penny immediately. I mean, right away. I mean, years ago, that never happened. We never knew that we were up $257.25 in the S&P after 20 minutes. Heck, we didn't know that for, till the next day when the equity run came out. I mean, you could calculate it in your head, but to see the numbers go up and down on your machine here, I take that thing off, because that's terrible. You see the equity going way up, it looks really good. When it's going way down, it looks really bad. It forces you to think differently. And that's what's really tough about it. So, try not to focus on the money, folks. Focus on the pattern. Keep the money out of the equation. You put money in the equation, you got everything screwed up, because that really affects people's thinking. And so take that money away. Don't watch what your equity is every second and stuff like that. It doesn't mean anything. Just follow what the pattern is and do that. And believe me, that is not an easy thing to do, folks. I fight it every day. I certainly do. But I do better than I used to. Now let's take a quick look here. We got Rich coming up here at the break, but let's take a quick look here at Bitcoin. We've had this beautiful ABCD. It was absolutely perfect ABCD, 20,400. The 38% retracement from that long-term low way back there at 3,100 comes in at 28,000. This is possible. It's
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of Tfnn.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of Tfnn.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even
even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting tfnn.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of tfnn.com.
Okay, we're back, folks. We're talking with Rich Anderson. Rich, are you there?
Yes, bet. Good morning, Larry.
Good morning, Rich. I posted a chart of the March corn. We're now trading at around $4.95 this morning. The 382 on that comes in at $4.90 a bushel. And, we had that big gap up on the 12th of December with that tremendously bullish report. We got up to $5.45. Now we're 60 cents lower. And, Rich, is this the end of the bull market?
This is a demand bull market, Larry, and demand bull markets don't last or don't end in 5 months. There's just the end users. They need this corn, and weather and money flows dictate how the markets react for short periods of time. But the bottom line is there's demand. We're going to have to ration. Margin call selling last night. There was a huge amount of volume last night. But that's all it is. That's why you have to manage your risk. But demand markets, you have to ration supply, and that will continue to go on. The February dip is typical in grains. This is a little early. It isn't quite February yet. And then you'll have, at the third week of February, you have USDA. We'll talk about all the acres we're going to plant this year. Private forecasters are currently anticipating we'll plant 11 million acres more than a year ago. Of course, keep in mind that 11 million acres is not the best land. It's the marginal land at best. So the Climate Prediction Center came out, and frankly, that would tell you to keep an eye on the U.S. weather. The last 2 weeks, we've seen some moisture down in South America, which had been forecasted, and that's improved things for the moment. But like the NOAA climate prediction, that's another thing you keep an eye on. Trent Ford, the Illinois state meteorologist, was talking about Illinois, Indiana, North Dakota, Nebraska, and Kansas are in the 5th percentile for moisture right now, soil moisture. I don't know. I wouldn't put my money on a bumper crop if I was starting down in the bottom 5 percentile, would you?
No, that's for sure. Tell the folks the difference.
Those are things to consider.
Yeah. Tell the folks the difference between a demand market. You discussed demand markets, but the other part of bull markets you have are supply markets, where you just run totally out of supply. Now, we haven't reached that level yet in beans, but we could certainly do that if demand continues, couldn't it?
Oh, absolutely. And that kind of a situation would occur if all of a sudden we get into late March, April, May, and we have major weather problems in the U.S., which have caused either planting delays or the stuff gets planted and gets started slowly. I mean, there's a lot of things that can go on. That's why I've always said when I've been on your program over the years that, and oftentimes the markets were in sell-offs at the time, that once the farmer gets his money in the ground, the markets seem to catch and volatility seems to increase as the risk, is now for real. You can talk about how many acres you're going to plant, but then you got to get them planted, and sometimes it rains and you don't get them planted. There's a variety of things that occur. So I think this is a demand market. Demand markets last longer than 5 months. This is a normal correction. You trade the markets technically. Money flow is bigger than ever, with all the traders that are high-frequency traders these days, amongst others. So you have to manage your position and manage your position size, and because these are volatile markets.
Rich, are the high frequency traders, are they involved in the grain markets at all? I don't even know.
Well, you have. Even the major grain companies have divisions where they have traders that are high-frequency traders in their individual markets. As an example, an ADM would have a guy that's a trader in the cattle, and they're using the algos on the computers, and they whipping in and out of them, and that's a grain company. And then you've got the hedge funds and all these others. Keep in mind, our money supply has grown massively. There's just that much more money sloshing around in the world, and a lot of it doesn't have a place to go, so it goes wherever it can, make some money. And they look at opportunities. You might think that a corn market is kind of boring. Well, you put 500 contracts of corn on because you've got the margin, and can use leverage, and all of a sudden that's just as interesting as Tesla or whatever other high-frequency stock that's swinging around these days. That's the thing, but that's why you have to manage your position size. That's why it's so critical, and manage your risk.
Wow, I know. That's really, really incredible. Rich, I'm sure you remember this, but back in '76, Willard Sparks, had Sparks Commodities down in Memphis, Tennessee, and he was running Cook Grain at the time. This was before Sparks Commodity. He was running, he started Sparks Commodities after he left Cook Grain, but Cook Grain was heavily involved in the short side during that time, and I happened to be on the other side of that trade, and it actually bankrupted Cook Grain, and yet Willard Sparks turned out to be, one of the premier grain analysts that ever walked the floor of the Chicago Mercantile and Chicago Board of Trade. So that just shows you that, it shows you how things can change over a period of time. But I remember how short they were.
The key point there, Larry, to that story is, A, he's brilliant, but he didn't manage his risk and he didn't manage his position size. And his position size got up to a point where he couldn't liquidate efficiently to get down. That's the whole key of that point. You manage your size and your risk, and he did not do that. He learned from that lesson, and he was one of the great analysts that the commodity industry had for years and years and years. By the way, the other thing that shows you the demand is the inverses. In July, these corn, the difference in price back in 2011 at this.
Uh-oh, we lost connection here. Uh-oh, what's happened here? I think we've lost connection. Broadsword to Danny Boy. Broadsword to Danny Boy. Come in, Danny Boy. Can anybody hear me? I think we've lost.
Hey, I'm back, Larry. Okay, I don't know what happened.
Okay. Yeah, I don't either.
Well, about inverses in the July D's corn tells you the strength of the demand market, and where did prices go in 2011, 2012, and 2013? They went much higher than where we are now. If you look at the carryover ratio, our carryover ratio is similar to 2011, 2012, 2013. Again, these are years when the markets went $6 to $8. I'm not saying that's going to happen, but, be careful if you want to fade this demand market.
Yeah, that's for sure. Are the markets still a little bit lower this morning, Rich? Did beans hold the $13 level? I thought they were going to hold $13.01, but I don't know whether they did or not. The March beans. Hey, we'll be right back with Rich Anderson, folks. Anderson Capital Management.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to tfnn.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same tfnn.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new tfnn.com now and experience all the upgrades. tfnn.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're chatting with Rich Anderson. Rich, I ought to tell you today, it looks like Switzerland here. I know you've been to my house several times, and there's snow all over the mountains, and Mount Lemmon is closed. It's got so much snow.
Well, that's got to be beautiful. That's
beautiful. But unfortunately, it's not on the ground here. It's just around the mountains. But that doesn't mean it can't change.
The moisture will come down the mountains.
It's going to be in the 20s tomorrow here, believe it or not. Be about almost like summertime in Minneapolis.
I know. I know. By the way, those years I mentioned where the inverses were 91, 56, and 129, 2011, 12, and 13, that's years when corn got to 799, 843, and 748. These are demand markets. What started the selling last Friday was the Asian funds traders were liquidating. They're concerned about two things. They're concerned about Asian swine flu that's showing up and what impact that would have if that became a big problem and, they would start liquidating their hogs again. That would be bad. And the other thing was the daily cases in China with the Lunar New Year coming next week and all the people, and there's a lot of people in China going to be taking vacation. Is that going to expand the COVID in China? So those were two of the fundamental things. But the bottom line is our pot only has this much in it, and the demand is bigger than our pot. And until we grow a successful new crop in the United States, which won't be until August, we've got a situation, and rationing is going to have to develop. Manage your size, manage your risk. Opportunity exists.
Are you and Lisa still isolated? You check all your food coming in and everything like that, and you stay in the house almost all the time?
Absolutely. Waiting for our first vaccination. Who knows when that'll be? The state of Minnesota hasn't been quite as good at it as, say, a state like South Dakota or North Dakota or Connecticut. Each state has the right to decide how they're going to do their population. Yeah. And we shall see. By the way, the country that we're keeping the closest eye on to see about how the efficacy works in a larger population is Israel, because they cut a deal with Pfizer that they would give all kinds of data back to the company if they got all their doses. And so I think they're going to be the first one that, that's where we're really keeping an eye on to see how successful these various vaccinations are.
Larry Williams has got his son as a doctor over in Shanghai, and they're having a big problem over there with the resurgence of the COVID. They're doing some lockdowns. They've shut Disneyland down over there, I guess, and some other things, but starting to show up again. I think we've lost, I don't know how many, I think 3 million people worldwide, but, it's only been a year. This thing might last 2 or 3 more years, Rich. Nobody really knows for sure, do they?
No, that's why we're watching Israel, and they're the farthest ahead of any country, and, we're keeping a very close eye on that. By the way, I think the beans bouncing off the $13, rallying back up to $13.39 3/4. That's kind of impressive. But these markets are going to swing. They're going to swing wider than what we've been used to recently, and so you've got to adjust your risk and your size accordingly.
Yeah. I sent a video out, as you know, on beans last night at that 1303
level. I know,
level.
but I don't look at those things before I come on the air because I don't want to be biased. I will look at it. I want to give you, I don't want to have any, talking any positions or any analysis. Unbiased opinion.
I know that's a really difficult, unusual thing to do. In fact, I was talking earlier about how these folks are looking at their equity all the time, about the prices going up and down, on their machines all the time watching. I mean, we never had that when we were starting out. We didn't start getting that until about 1996, 1998, and I think it's a terrible detriment. I mean, Mark always talked about it as being detrimental to see where you were doing at any one time, because you start focusing on the money, your idea of what the trade's all about goes out the window. And you don't do that, do you, Rich? You don't follow it day to day or minute to minute?
Not at all. I wouldn't even want to have that on my screen. As Mark and you have always told me, you need to manage your risk. You need to put a stop in, but a stop has to be at a meaningful point. It can't be at a point that has something to do with money. It has to be at a point where the market's breaking down. So if you're thinking about money, you're going to put your stops in. You've got to identify where a market breaks down, and that's your risk point, and to determine how many contracts you can trade for your normal risk versus that point. Not, I'm going to risk X amount of dollars, because then you've got a meaningless stop in the market that can easily be washed out. That's in my humble opinion. And that's what I learned from you and Mark.
Well, we all learned together, buddy. That's for sure. We had a lot of fun when you used to come out and visit us. That's for sure. But Rich, of all the years I've known you, I've only been invited to Minneapolis once, and I went. Of course, that was in the middle of the summer.
Dear. You had fun. You had fun. Yeah. You got to go to games.
Oh my gosh, Rich! I remember Marissa was 4 years old, and I was using her room, and she came in and showed me where my drawer for my things were and everything. Here she was 4 years old. What's she, about 34 now? How old is she?
32. She's 32.
Oh, yeah.
But,
my gosh. Where does the time go?
Just as a side, like Larry, I've only ever had 3 friends stay in my house. You're one of 3 people in my lifetime that I've stayed in my house.
Well, thanks, Rich. Yeah. And you didn't miss any of the silver that I took either, huh?
No.
Okay, that's good. Anyway, okay, that's what we're looking at here. Anyway, let's take a look at these some of these markets that we're watching here this morning. Rich, I have a question about the bond market. People are asking me about it, and frankly, I think bonds would probably be trading 10 points under where they are now, given the fact that they're going to be printing so much up. And what's your feeling on this?
I happen to agree with you on that, and actually on the bond chart, I have a technical objective about 10 points lower. The bonds actually are rallying today. That will be influenced by, can they get a stimulus package passed? How big is the stimulus package? But I think there'll be an inflection point where all of a sudden inflation will start to kick in, and when that inflation starts to kick in, that's when the assets. And I believe we have a secular bull market in commodity assets that's going to last for years and years, like 4 or 5 years, not 4 or 5 months. And I'm just talking corn, I'm talking metals, I'm talking oils, I'm talking all kinds of things. I mean, we won't know, for instance, as an example, that oil production in the fracking part, which is the swing part of production in the world now, is going to fall off sharply because you have to be drilling new wells all the time because production from 1 year to 2 years drops significantly. So I think it's a long secular bull.
Rich, we got a caller. Mr. Z's calling in about live cattle, April cattle. What's your question, Mr. Z?
Good morning, Larry. Good morning, Rich. Thanks for taking the call, gentlemen. Rich, I wanted to ask you a very specific question on that April live cattle futures contract. Just to preface the question, I have been monitoring, researching, trying to understand how the cattle futures contract has diminished in its importance with, profits in the industry with so much.
Hey, we'll cover that, Mr. Z. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of tfnn.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of tfnn.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to tfnn.com and click the newsletters button near the top of the page. tfnn.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of tfnn.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of tfnn.com.
Okay, we're back, folks, and we are chatting with Mr. Z and Rich Anderson. You want to continue with the April cattle question, Mr. Z?
Yeah, Rich, real specifically, with April cattle having broken out Friday over the 120 prior highs, my question, Rich, in your mind, can April cattle run up to 130, and that's a level that April cattle had gotten to each of the past couple of years. That's a very specific question. And thanks, Rich.
I think that that's a possibility. I look at the April cattle flat price and also look at it as a relationship versus, say, the June. Last week, April-June cattle were at a $1.50 differential. Right now, they're at $4.25. By the end of March, I expect they could be at $8 difference, and that's when you could see the April cattle up to $1.30. The cattle right now are a pretty good premium to the futures, but they call this a futures market because the traders are looking at what's going to happen in the future, just like Wayne Gretzky used to go to where the puck was going to be, not where it was. And so, yeah, I think there's a good possibility of that, but there's going to be a lot of swings in between now and then. And I would think that would be more in the March to 1st of April period. The key point is vaccination, and the rollout of the vaccine has to be successful. And then I think you'll see a big surge in restaurant business, et cetera, and that's going to use up the high-end cuts of the beef, which is what drives the cattle market.
Thanks so much, sir.
Hey, Rich, thanks for joining us, buddy. We'll have you on again soon, and stay warm over there. You're going to get some warm weather around July 4th, so just be patient.
All right, you trade well. Take care.
All right, buddy. Take it easy. Stay safe, everyone. We'll see you tomorrow. Live every day in an attitude of gratitude, and may God bless. And we have the wizard himself tomorrow from Naples, Florida. Norm Winsky from Astro Trends will be our guest tomorrow, folks. So we'll see you on the flip side. Hopefully I'll get my skis out, do a little mountain skiing today, and if you believe that, I still have 2 shares of the Brooklyn Bridge available.